cool where you debate and argue, and some of our discussion can be an input to subsequent drafts in the policy. So we are told that now 50% reduction in minimum tax from 0.5% to 0.25% of gross turnover, less frank investment income for companies in respect for return for the year of assessment due for 2 years, okay, between 1st of January 2020 and 31st of December 2021. So if you file your return between 2020 and 2021, then your minimum tax is now 0.25%, okay, of gross turnover, less frank investment income. So this is good in terms of minimum tax. The issue of minimum tax is being debated anyway. But it has been simplified in terms of before how to compute minimum tax. You need to check the net assets, the turnover, the paid up capital. Uh, a lot of things to get minimum tax. But the tax policy say simplicity, and you could see that this is coming from simplicity. We need to simplify the tax law for people to comply with ease. So not that you have to rack your brain for you to know your minimum tax like it used to be in the former tax law. Uh, these are some of the pitfall in the 2012 in the national tax policy of 2012, that despite where it was enacted, the law was not aligned, you know, to it. But now with the 2017 revised national tax policy, you could see that there are some part of simplicity in the tax law. So minimum tax that used to be very complex to calculate is just 0.5% of turnover, less frank investment income. Now it's now reduced to 0.25. That means if you file your return in 2020 and 2021 year of assessment, okay, and of course there's an issue with this range. Okay, and this will be discussed subsequently because in the Finance Act of 2019, the minimum tax was 0.5. So people are saying that this range should be if you file your return within 2021 and 2022, 1st of January 2021 to 31st of December 2022. So that is something that is reasonable. So I'm not, based on this range, but let's follow it the way it says in the law. Is between first, it's clearly stated 1st of January 2020 to 31st of December 2021. So if you are filing your return in 2021 and you are filing for minimum tax, let's assume that you made a loss and you are a medium-sized entity or large company. It's just 0.25 of gross turnover. Exemption of low income earner of minimum wage or less from personal income tax. So if you're on minimum wage or less, 30,000 naira per month, okay, if your income is 30,000 naira or less, then you are not to pay personal income tax. Of course, personal income tax is a challenge to the state internal revenue services. That's why when you get to the tax office, they will even there are some provisions within the law they won't even let you know because they were like, the income, like, let's look at a state, not Lagos State now. Let's look at state that not that let's say, I don't know, it's just for discussion. One of the states with the lowest internal revenue is Ekiti State. That's in Nigeria. The one of the state with the lowest internal generated revenue. And Ayafayoshe, when he was there, speaks so much about it. A state like that, I am telling that state to exempt some people from personal income tax. It's most of them are low income earners in that state. So that means they're going to lose a lot of revenue, except they think strategically inwards to see alternative way of making revenue. So tax is a very sensitive matter, and I'm sure that's why any incentive that is given uh, must have been discussed widely and probably agreed by all participants because personal income tax for me is It's not within the jurisdiction of the most of the time when it comes to resident of a particular state is within the jurisdiction of the states. Okay, but the law is enacted from the federal, and I'm sure the Joint Tax Board will have been consulted before these changes in the Finance Act of 2020. So that's how what we have. So if as a consultant, you look at the payroll of your clients and you see people on salary of 20,000, 25,000, 10,000, 15,000, they are there, like they con or maybe the driver, the cleaner, the security. So all those ones are exempted from tax from this Finance Act of 2020. Okay, so that's been fair to them. Now, exemption of all micro and small companies earning 25 million or less in annual turnover from tertiary education tax. So in 2019 Finance Act, this was not clearly stated, and we keep arguing in the tax office that it's only companies income tax that micro and small company will not pay, not tertiary education tax. But now it's clearly stated that they must they're also exempted from tertiary education tax. But this does not mean that they shouldn't file their tax return. Okay? And this does not mean that this burden has been shifted to some other persons. So this is like shifting the burden from small to medium and to large entity. So and again, as a medium, I mean as a small micro company does not stop you from preparing your audited accounts and filing your tax return. Okay, obligation is still the annual filing. So if you are small, you feel you are not paying tax and you leave and you become big one day and you needed some tax clearance or some things with the tax office, then they'll calculate the penalty. The penalty is even more than the tax. So we should advise our clients not to be carried away by this provision. Any incentives of the government, not to be carried away, but go claim it and look your back and protect yourself. Now, exemption of commercial airline tickets, commercial aircraft spare parts and components, interest in land and building, animal feeds, hire, rental, or lease of agricultural equipment for agricultural purposes from value-added tax at 7.5%. So if you are into real estate, you know, land, buying and selling of land, building, land has been exempted, but building has been added to it now. Then you are exempted from VAT just to give shelter to people and people have a place to sleep. So we also have exemption from agriculture, but our challenge is, agriculture have enjoyed a lot of exemption for some time, but we want to see the impacts on food prices. We know that there are also macro issues in Nigeria, as I said, issue of light, issue of road infrastructure, security. So that's why we said the other end of taxation, which is budgeting, okay, which is currently heavily debated in Nigeria, should continue to be debated so that everybody is responsible for spending taxpayer money, spend the money judiciously, and people feel the impact. And that's when we can see the impact on agriculture. So, but exemptions are there for agricultural business, commercial aircraft and spare parts, and commercial airline tickets. Okay, so these are exempted from. So if you check your commercial airline ticket and you see VAT, then it's not supposed to be. So commercial aircraft spare parts and components as well are also their spare part and component are also exempted from VAT. Adjustments to incentives under the Finance Act 2019, such as any small or medium-sized company engaged in primary agricultural production may be granted pioneer status, tax relief, for an initial of 4 years and additional 2 years, making a total of 6 years. Well, this is not this is an adjustment. It's not an additional incentive because the former Finance Act gives it make it automatic that um, when you are into agriculture in the first 5 years of operation, or 4 or 5 years, then you are exempted, from a lot of things, companies tax, education tax, just like we have in the pioneer status. But now